Welcome back. Now, trade talks between the US and China are set to continue into a second day. The discussions come as both sides try to preserve a fragile truce brokered last month. Tian Pan, head of strategy at Prescient China, joins us now for a closer look into these developments. Thank you so much for your time and actually for coming into studio as you are in South Africa at this point. It all feels like deja vu because just last month we were talking about the US and China having trade talks. And it's quite interesting because US President Donald Trump had actually hailed the talks that were had last month in Switzerland as a total reset in relations between the US and China. So how did things actually take a wobble after an agreement was reached?
I think there was obviously a lot of high-level wording in terms of the agreement. The US side complaining mainly about still heavy restrictions on rare earth minerals coming out of China. And we believe that's probably going to be the key to the current negotiations taking place in London. That's what the US side wants. And hopefully they will get some of what they're asking for.
Yes. You talk about these restrictions on these rare earth minerals. And I'm wondering because, I mean, everything was centered on tariffs. Has this now gone beyond tariffs?
Yeah, absolutely. I think obviously the 145 versus 125 tariffs that we had prior to May 14th effectively was a trade embargo. Now that the two sides are trading with lower tariffs, other topics have come into play. So, for example, the US recently further restricted Chinese company access to semiconductor chip design software, started scrutinizing Chinese student visas. So all of these other messy things are now part of the conversation, and we need to negotiate our way out of that.
Yeah. It's quite interesting because it's like you solve one thing and we are relieved on this one thing, and then other issues come into the fore. So you kind of ask yourself, will it ever end? But anyway, it's been like that for a couple of years now, so maybe it won't. I'm wondering then now, because obviously for the parties to get back to negotiations, as we saw in London with the first day yesterday, and that was after the two presidents got on a call and we started to see some olive branches being extended. I don't know if there's been anything official to come out of the first day, but have you heard anything that's come out?
So nothing official that we've heard of either. But yeah, so I think our expectation is that negotiations have been pretty tough. I think it's quite interesting watching President Trump's tweets. That's almost all the inside information.
That's how you get your information.
Yeah, so the fact that it's being lengthy negotiations, meaning it's probably quite tough and ongoing.
Okay. It's also quite interesting that you speak about the two countries trading now with lower tariffs after we saw the cut from the 145%, 125%. Yesterday, we did have trade data coming out of China for May. And just looking at those numbers, it just seems like the same story. And I'm wondering, are things just still not looking pretty? I guess particularly for China, both from a domestic demand and export point of view?
So I think overall, obviously the latest data that came out, overall Chinese exports still growing, but not as much as if there were no impact on the US. Exports into the US in May, massive drop. But I think if we zoom out a little bit, our view has been that China will be hurt if trade with the US absolutely halts. But overall, it's only about 3% of China's total GDP. So while it will be painful if things continue to deteriorate in terms of trade, it is something manageable by the Chinese. Obviously, policy to domestically continue to try and stimulate retail consumption and try and help youth employment, etc. So overall, in an okay direction for the Chinese economy.
So then obviously we have to ask, how are investors like you then navigating the investment environment amid a really, really uncertain and volatile economic environment right now?
So we've always been saying to our clients that China has been and continues to be an extremely volatile market. And within that volatility, you always find a significant opportunity, but you really need to know what you're doing. So some of the things Prescient are doing in China is that we make sure we cover all the markets. So you have your offshore Chinese market in Hong Kong, you have your onshore market in Shanghai and Shenzhen, and then you obviously have your fixed income component that you really need to consider all across the board. In addition, we are using derivatives to reduce volatility in our China exposure to ensure that we have the smoothest experience possible under very volatile geopolitical conditions.
All right. Well, we do have to wrap up the conversation there, Tian. Thank you so much for your time and for your insights in terms of what is happening between the US and China. And hopefully we can get news in London this week. Please do enjoy the rest of your stay in South Africa.
Thank you.
Well, that was Tian Pan, Head of Strategy at Prescient China.